Thank you for joining me. I'm Erica Carlson with Bricks Real Estate. I'm bringing Wright County market update towards the end of the video. So I have my friend and colleague Molly Zimmerman from Bell Bank Mortgage back today to talk to us about how instant pre-approvals can get you denied on buying a house and unfortunately, some of the cons that come with that. So I'm going to bring her on in just a moment. Below, if you need to get a hold of me, whether it's a discovery call or you'd like to talk to Molly as well, we can touch base with you on any real estate topic. So if you look at that very first link option, it will bring you to my calendar and you can pick a time that's best for you. Of course, if you learn anything new today, I'd love for you to join my growing channels, whether you found this on Facebook, I have a professional page, Instagram, or my YouTube channel. So without further ado, I'm going to bring Molly on to discuss these instant pre-approvals.
Thanks for having me again. Like, as a society right now, a lot of people just love what is fast and what is easy, right? So we've seen a lot of lenders push out what is called an instant pre-approval, meaning you submit your information online and you are generated some sort of an approval pretty much instantaneously. The issue that I have with that is I feel like those pre-approvals are pretty much as good as the piece of paper that they're printed on. Truly, they can be absolute garbage because nobody is actually cross-checking the information that you're putting into that application. As a lender, I would say probably 90 to 95% of the applications I get, I'm tweaking something, be it changing assets, changing the income we can use for approval. There's missing information. So I feel like an instant pre-approval is fast and easy, but it's not necessarily going to get you to the closing table, which is where we ultimately want to end up. So I think it's a little dicey to take that as, word of gold. Like you're good to go. You're not really good to go.
Right. So if you meet a realtor and you're looking to see houses and they're asking you who you're pre-approved with, and I know we're trying not to use anybody's names, but when it's, if the person's like asking you questions, I wouldn't necessarily feel defensive about it. We're trying to save you heartache. If you haven't uploaded documentation and you haven't really talked to anybody yet, then that should be a concern to you as the home buyer. Like, does this mean anything, or is this going to fall apart later? We've talked about this many times before. It does not hurt to get multiple opinions. So go ahead if you want to try one of these and see where it goes. But I don't think it's really a pre-approval. And sometimes we just ask to see them. Again, we're not trying to be invasive, but there's key words like, and correct me if I'm wrong, like I think the difference between pre-qual and pre-approval is one of the things you can figure out on your own. Like if it just says pre-approval, I'm sorry, pre-qualification, maybe that should be kind of a moment. Now, there are some lenders that intermix that language. So again, we want to ask questions. We don't want to assume it's a problem, because I've asked lenders for a pre-approval and they're like, I gave it to you, but it says pre-qual on it. I don't know why. There's no industry standard on that language, but there isn't. Is there anything else somebody can do on their own? I'm thinking paperwork. If you haven't submitted paperwork, you're probably not pre-approved.
Yes. I mean, I feel like we get a lot of pushback when we take the time, or I take the time as a lender to ask questions when I get an application, to collect financials. And we do sometimes get pushback from buyers who say, well, I applied with so-and-so. They didn't ask for any of this.
Yes.
That's concerning. And one thing I will tell you, as a lender, I'm paid by commission. Okay. So if I'm spending my time up front working on your file, I'm basically doing work for free. And a lot of these companies that offer the instant pre-approval, they have massive marketing budgets. They're spending a ton of money, bringing a bunch of leads in. But they almost look at it as like a funnel. Okay. So we're going to bring a ton of leads in, but at some point, we might give them all an instant pre-approval, but we know there's going to be fallout. They're not going to take care of you the same way that a lender is, who's actually taking the time up front to go through this information with you.
Absolutely. And I don't think I've told this story before, but I recently was working with somebody that I think this is what they had done. I think they had clicked something online and they were very convinced they were pre-approved. They even wrote an offer on a house. We were able to get that person to communicate with us and, validate it to an extent. However, that's the key word, to an extent. because as it was getting closer to being accepted, I was able to unravel a slew of issues that were so disconcerting. Now, of course, it upset the person buying the house because they didn't like that I was um exposing things. Like, so for example, just so people understand, it's not like major detective work. If you have no money in your bank account and then you're telling me you can do a modest amount of earnest money and it's due in 2 business days after the seller accepts your offer, and it comes out that you don't have any money in your account, so who pre-approved you and doesn't know that you don't have any money in your account? Nobody told you this was coming, because I certainly tried to jump on this early, but this communication only works if someone's being honest and telling me things up front. So if things are being withheld, and as a realtor, I don't think it's my business to ask you how much money's in your checking account. But being pre-approved, I know this is kind of a disgusting way of saying this, but it is a financial colonoscopy, and accepting that up front. I don't know how you feel about it. But it's the one time in your life, like, somebody is going to deep dive into your taxes and W-2s. And if you're self-employed, there's going to be hand holding on how to make that work. And we have to be open and honest and forthcoming, because going under contract on a house and finding out, there's $500 in your checking account, so we're skipping the inspection, we don't know how we're going to pay the appraisal, we don't have any money for the earnest money. It's unraveling. Everything's unraveling, and it's not about my time or it's about your time as the person looking for a house. We've set your hopes up so high, and we've talked about this before, Molly, where it's like, oh, you got so excited about a house. Now it's all falling apart because this particular company didn't jump on this stuff early enough, and they sort of set you up for failure, because they basically said, go ahead, go house shopping. Here's your make-believe budget that doesn't exist. It's these are really frustrating experiences. So I'm glad we're talking about this today.
Yeah. And I mean, I think it's really concerning if your lender is not asking questions and not doing their due diligence up front, because like Erica said, I mean, you find a property you fall in love with, and what happens if it falls apart 2 weeks before closing because they didn't ask those questions? They didn't collect the financials. At that point, you've got money into an appraisal. You might have an inspection. You have mentally moved into that property. You're thinking about furniture. You may have packed up your other house. You might be selling another property.
Yeah.
And to not be able to close, I mean, that is a really that's a big deal. And I think, just knowing that as a lender, we're not going to ask you for things we don't need. We're truly asking so that we can do a good job and make sure that you don't have issues later. That is 100% the goal.
Absolutely. And it should be considered like a good thing rather than feeling invasive. Yes, it is a little bit of work, but the goal is to get you a house. That's why we're supporting you. And I like to call it a success fee, whether it's the lender or the real estate agent, we don't get paid unless you find a house. So all the questions we're asking you, it's to the benefit of you and trying to create that success, versus let's just look at houses to look. I mean, you certainly can go to open houses. You can look all day long online without setting up those feelings and experiences. And you have to remember, a purchase agreement is a legal contract. So if you're telling them you have the money to buy it and you don't, you're getting yourself in legal hot water as well. And we're trying to avoid all of that. Is there anything else you wanted to add on this topic before we wrap it up?
Just two quick things. I mean, as a lender, we have absolutely we're not accountable for, like, if we give you a letter and you don't close, nothing happens to us. We're not liable for that. So I think another reason just to think about why you want to work with somebody who does ask the questions, you're the one that's out the money and the time and the dreaming. And then also, as far as financials, if we're asking for something, there's a reason we're asking for it. If you're unsure why, just ask us. Why do you need this? We can explain why we need something, because believe me, I'm not going to ask you for things I don't need, because truly it's more work on my end. I want to just cover the bases I need to cover, and make sure you're good to go and we move on. And with that being said, don't send things that we may not ask for either, because once you send something, we can't unsee it. So just take your lender's advice.
Yes.
Follow through with what they're asking, and you should have a smooth process.
Yeah, absolutely. I know there's always a lot of confusion about those things. And, I hear comments like about people, using their phones to, it might need to be scanned a certain way. And, frankly, maybe you just need to drop it off if like the technology piece is really complicated for a person. That's okay. Like there's ways to figure it out. Like if you don't know how to upload page 8 of whatever, maybe you just physically, hey, there's another reason to use a local lender. I mean, if the technology is baffling, and it's getting complicated, there's solutions for that. So, well, we'll stop there. If you have any questions for either of us, where our information is in the link as usual. Thank you for joining us.
You can see the star continues to move to the left at a 3.07. So we haven't seen numbers like this in a very long time. Inventory is up, and we'll dig into that more on how it's impacting Wright County in just a moment. Interest rates are generally coming down. There is some nice numbers out there for folks that have not liked interest rates for the last, about 2 years. We're seeing some fives. So just kind of take that information on my screen here as just a general number. I'm not a loan officer. This is, no particular bank. It's 30-year fixed. It doesn't take into account to your credit score or anything like that. So let me know if you need a contact for a loan officer. Molly is on this call, so you can always reach out to her for updates on what Bell is offering. And then average days on market in general is 34, and then I'll show you here in just a moment how that compares to Wright County, which is significantly more. I think we're like in the 50s going from memory. So a month on market is not abnormal. So if you are out there house shopping and you see a house 30, 40, 50 days on market and you're like, oh, well, these sellers just must be super hungry to sell. They might be, obviously they might be, but it's not an abnormal amount of time. It's what's typical. And so we need to keep that in mind when we're writing offers, because we come in and we do a super low ball offer. And I'll talk about this a little bit more in a second. It may hurt you if you do something like that because you don't understand market conditions. And I do see this backfire on home buyers that get frustrated because generally speaking, houses sort of sell around the price that they're listed for, with exceptions to the rule. And so you want to work with your real estate agent and understand that. All right, let me pull up the next screen. That I want to point out to you really reinforces just kind of the general historical data of how things work. We typically slow down in August, kind of a tough time of year to sell a property. Seems to always pick up in September. And so you're always looking for that evidence, is that true? Well, when you looked at September 4th, where we hit 1.8 showings per week per listing in the 250 to 500K range, and just slowing that down a little bit, that means 1 to 2 showings is normal in kind of that typical price range. And that's just Wright County. 2.9 in Hennepin. That is slow. You go back in time, and being in the 2s is pretty normal for Wright County, but the 1s, that is very, very slow. So it takes until November of a previous year to be in the 1s. So it's like, whew, that's really slow to start out September in the 1s. So it's very nice to see that we came up to 2.23. Yeah, that's very technical. Let's just kind of round the numbers up there to just 2.2. So 2 showings per week is normal in Wright. And for Hennepin, again, 4.15. Okay, how about just 4.2? So Hennepin is also doing nice, is my point. And again, up over last week because we were at 2.9. So whether it's the interest rates that are bringing people out, it could be. I don't know that we really have evidence that the people that have been sitting on the sidelines thinking about moving have suddenly decided to do this because of interest rates. But I think it's more indicative that September brings more people out. And so, if you're selling a house, have hope that the buyer activity should be picking up. I wouldn't expect it to be anything like the spring market. Keep your expectations, I don't want to say low, but just kind of moderate. And, because overall we are in that buyer's market. it is the fall season, this definitely impacts things. So let's jump over to active listings, which also jumped out at me. We were at 619, and this isn't from last week. I misspoke. As I have noted here, I didn't do last week. So this is 2 weeks ago. We were at 619 and 563 that were no contingencies. And now we've jumped up. We have more inventory. Once again, I'm always telling you guys, now we have more inventory. I haven't said that in long time, but it has been sort of a continual thing here. We're in the 400s, 500s. Now we're pushing up into the 600s. It hasn't backed down. It's just more people keep listing their houses. 574 have no contingency. So that means, in a very long time, if you are a home shopper, there is a lot more opportunity. There's a lot more options than you've had in the past. And I try not to be the person that says, this is the time to buy. That's really salesy. I'm just looking at data. In terms of opportunities, you've got options. 210 were pending. So what that tells me is less people are going under contract. We're seeing about the same number of closings over the last couple of weeks at 206. So nothing's really jumping out there. And then days on market. Let's jump into this for a second and then we'll wrap it up. 51.5 is average, 22 is median. This is a significant jump over last 2 weeks. Before that, it was at 34. Then it was below the 30s. So, every couple weeks, it just gets longer and longer to sell a house. So you can see what I'm saying here about it being fall. It's impactful. You should have hope. But keep that level headed if you're a seller, because it doesn't seem like interest rates are bringing some mass amount of people off the sidelines. There's going to have to be a fair amount of patience when it's taking almost 2 months to sell a house. So ending on that note, if you are shopping for a house, now 50 is average. So coming in and driving some, super low ball offer. I've heard of people going hundreds of thousands below asking, or, percentage wise, let's say 20% below asking. Sellers aren't necessarily just going to give away their property just because it's taking a couple months to sell a house. You want to set your expectation, understand market conditions when you write an offer. Because frankly, it's just kind of a waste of time. You write the wrong offer. The seller may say, I don't want to hear from this person again. I don't want to say insulted. I don't really like when we say sellers were insulted by our offer. Sellers were disappointed by your offer, and they know what they have and they know they can hold off. And a lot of people don't necessarily have to sell when they have their house on the market. So maybe they're hoping to sell this month, but if all they're going to get is a bunch of lowball offers and they know they can wait till the spring where they can get more and they can have more interest, they would probably rather do that than give away the farm, if you will. So if you have any questions about market conditions, if you want a neighborhood market report, if you have questions about things, I do specialize in kind of that west, northwest metro kind of area. But that isn't to say I can't give you other data. If you have a particular question, please reach out about real estate, and I hope you have a great week.